As we approach the end of the tax year, you may be asking yourself if the timing is right to do a Roth conversion. In today's video, I'll give you 5 good reasons why a Roth conversion may be the right move for your financial situation. The first reason is that we know that absent any moves on the part of Congress, that taxes will be going up for all taxpayers in 2026. The federal income tax brackets will revert back to what they were in 2017 before the Trump tax cuts went into effect. This will represent an across-the-board tax increase for all Americans. So if you're planning on waiting until 2026 before you start thinking about a Roth conversion, then you will keep less of your hard-earned retirement savings. And that means that you'll increase the likelihood that you'll run out of money before you run out of life. The second reason you may want to consider a Roth conversion right now is inextricably tied to the first one. As of today, December 2023, you have 3 tax years within which to take advantage of tax rates before they go up for good. And if you fail to execute a Roth conversion this year, you'll only have 2 years within which to take advantage of tax rates while they're on sale. Let me give you an example of why this could be a big deal for you. Let's say you have $600,000 you want to convert to Roth before tax rates go up in 2026. If you begin your conversion in 2023, you could spread that $600,000 out over 3 years. You'd be adding $200,000 per year to your taxable income, not counting any growth along the way. And chances are, if you're currently in the 22% tax bracket, you could get those conversions done while staying in both the 22 and the 24% tax brackets. I think those tax brackets are good deals of historic proportions when it comes to Roth conversions. However, let's say you do nothing this year and end up beginning your conversion in 2024. Then you'll have to spread that $600,000 in taxable income out over only 2 years. At $300,000 per year, that increases the likelihood that you'll bump up into the 32% tax bracket on a portion of that conversion. And if you choose not to bump up into the 32% tax bracket, and I'd recommend you avoid it if you can, then you'll end up paying taxes at the 25 and 28% levels in 2026 and beyond. So as it turns out, being able to spread conversions out over 3 years instead of 2 can save you a pretty good chunk of change. The third reason you may want to consider a Roth conversion is the likelihood that taxes will rise even higher in 2030 and beyond. Our country has huge unfunded obligations for Social Security, Medicare, Medicaid, and interest on the national debt. Most experts believe that taxes will have to rise dramatically by 2030 in order to bridge those shortfalls. Some experts, including former Comptroller General of the federal government David Walker, believe that tax rates will have to double to right our fiscal ship of state. If you have a much larger IRA balance, you'd have 8 full years to get all the heavy lifting done before 2031 rolls around. If you don't start this year, that would give you only 7 years before tax rates are likely to rise dramatically. You want to execute your conversion slowly enough that you don't rise into a tax bracket that gives you heartburn, and quickly enough that you get all the heavy lifting done before tax rates go up for good. The 2030 tax year should be the drop-dead date by which you fully execute your Roth conversion. The fourth reason you want to do a Roth conversion now is what is known as the widow's penalty. This refers to the compression in tax brackets that takes place when your spouse dies and you go from married filing jointly to single filer. Someone who is normally in the 12% tax bracket, for example, would immediately be thrust into the 22% tax bracket. So whether or not you think that federal government will double tax rates in the future, your tax rate will double upon the death of your spouse. And at that point, taxes on a Roth conversion may be prohibitively high. The final reason you should consider doing a Roth conversion is that there is a good chance you may not spend all of your IRAs during your lifetime. And if your plan is to pass along as much of your wealth to your children as possible, doing it inside an IRA is the worst possible way to do it. Your children will be inheriting that money at a point much further in the future, when tax rates are likely to be much higher than they are today, when they're in a higher tax bracket, and when they have fewer deductions to offset all those taxes. And with the death of the stretch IRA a few years ago, your children will now have to realize that IRA as income within 10 years. And if they don't plan well by liquidating 1/10 of that IRA per year, they could fall asleep at the switch and end up having to realize all of it as income in the 10th year. That's a great way to make sure that at least 50% of their inheritance goes to the IRS. Now, if they inherit a Roth IRA, they'll still have to withdraw the money in 10 years, but there will be no taxable implications if they wait until the 10th year to do it. In short, if you anticipate that a Roth conversion will figure prominently in your tax-free retirement strategy, consider starting before the end of this year. Roth conversions are one of the best ways to shield you, your spouse, and your children from the impact of future higher tax rates. If you would like some help implementing a balanced, comprehensive approach to retirement planning that shields you from longevity risk and tax rate risk, head on over to davemcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the PowerZero network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified PowerZero advisor, head over to powerzero.com and opt into my free video series. If you have any comments or questions, feel free to drop them into the comment section below. I'll respond to every single one of them. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.